Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. I've got a ton of information for you, so let's jump right in. U.S. stocks closed lower on Friday after another hotter than expected inflation reading undermined the case for interest rate cuts. The Producer Price Index, a key gauge measuring wholesale inflation, jumped 0.3% in January from the prior month, compared with the 0.1% rise expected by economists. You can see all the indexes closed in the red, with the small caps in the Russell 2000 taking the worst of it, down 1.39%. Now on this slide, we're going to monitor what the herd is doing right now. Where is the money going? Headline: biggest outflow from cash in 8 weeks. Investors buy stocks and bonds, right? From the article, investors dumped cash and continued to pour money into equities, particularly tech stocks and investment-grade bonds, in the week to Wednesday, B of A said in a report on Friday. So the herd jumped in just in time for this sell-off, right? Maybe the pros are luring people in to get some liquidity here at the top. Just something to think about. There were inflows of $16.1 billion to stocks and $11.6 billion to bonds, compared with outflows of $18.4 billion from cash, the most in 8 weeks, B of A said in its weekly roundup of fund flows in and out of world markets. So, Uncle Frank, are you finally growing skeptical of this rally? Well, in a word, yes. Check out this headline from Markets Insider. The epic stock rally will end badly. The AI bubble will burst, and the economy will sink, warns elite investor. From the article, Jeremy Grantham warned U.S. stocks and the economy are headed for trouble. The elite investor and market historian said the AI frenzy is a bubble that's bound to burst. Grantham predicted a decade of disappointment for stocks and flagged several long-term threats. Guys, when the large tech stocks are attracting all the attention and the rest of the market is getting very little support, the S&P 500 breadth is now the worst since 2009. That could spell trouble. Now let's run around the neighborhood to see the aftermath of this past week. Mortgage rates shoot to 2-month high after new report shows inflation is still hot. The average rate on the 30-year fixed mortgage jumped to 7.14%, according to Mortgage News Daily. Mortgage rates hit their last high in October, but then fell sharply over the next 2 months, leveling at around 6.6% in December. Mortgage rates shot higher Friday after a monthly government report on wholesale prices showed inflation is still persistent and hotter than most analysts had expected. Now you know why economists call inflation sticky. So now the people at the Fed are all running around saying basically the same thing. Investors will have to wait until at least July for those widely expected interest rate cuts, according to one Fed Reserve president's outlook. Atlanta Fed President Raphael Bostic said rate cuts probably won't be suitable until the third quarter given the current strength of the economy. Why don't you just come out and say we're going to cut right before the election so we can hold on to our positions and power? So quickly, what are the latest odds on rate cuts? From Investors Business Daily an hour ago. Fed rate cuts. When will they start? How many will there be? Here are the latest odds. Markets now see scant chance of a Fed rate cut on March 20th and don't expect easing to start until June. Investors have also scaled back expectations of 6 quarter-point Fed rate cuts in 2024 to 4 rate cuts, possibly only 3. Remember, in late 2023, Fed policymakers signaled they expected only 3 rate cuts this year. So what are the odds? March 20th, 10% chance of a quarter-point rate cut. May 1st, 38.4% chance, and June 12th, 81.6% chance of a quarter-point cut. And with the election coming up, we need to keep an eye on these kind of developments. US deploys half of its aircraft carriers to China's doorstep. I'm not just watching Israel, Ukraine, China, and Taiwan. I'm keeping an eye on the people that would rather die than give up power and start wars to cover up policy mistakes, like the guy with a full diaper running our country. The United States is expected to deploy almost half its aircraft carriers in the Western Pacific this year as military tensions continue to rise over North Korea's nuclear ambitions and China's territorial claims. Moving over to Swan Watch, these headlines on the commercial real estate crisis don't seem to be going away and don't seem to be getting any better. Vacant office buildings drain billions from banks. Commercial real estate is in big trouble, and the problems may have major financial fallout. Problems for the U.S. commercial real estate sector seem to be getting worse and spreading. Steeper interest payments, tighter bank lending, and declining asset values have slammed the sector. Some bold buyers plan to capitalize on the chaos by scooping up bargains. The tremors rattling U.S. commercial real estate are spreading to other countries and sectors and threaten to escalate into a financial earthquake as refinancing deadlines loom. From the Cryptopolitan yesterday, banks petition SEC for crypto custodianship role amid Bitcoin ETF surge. Oh, I see. Now you guys want in. I thought crypto was a joke, a scam. Major banking institutions in the U.S. are lobbying the SEC to reevaluate its crypto asset definition, aiming to secure a more prominent role in the burgeoning cryptocurrency market. The push comes after the recent approval of spot Bitcoin exchange-traded funds, which notably excluded American banks as asset custodians. But not everyone wants you prime bank guys in the crypto world. Fed Reserve wants to ban U.S. banks from holding crypto ETFs. When it comes to the blockchain industry, it's clear the times are a-changin' and not everyone's pleased about it. With the crypto market gaining unprecedented momentum, it's become a hotbed of debate, especially among the high and mighty of finance. The Fed Reserve finds itself at the epicenter of this debate, particularly with one of its governors throwing a sizable wrench into the crypto celebration. As we go further into the year, it's becoming more clear that the cryptocurrency sector is no longer just comprised of amateurs mining Bitcoin in their basements. After receiving approval from the SEC to 11 spot Bitcoin ETFs at the beginning of this year, the cryptocurrency industry became set to fly into the financial skyline. Well, we can file this under things that wouldn't have happened if Trump were president. Egypt has officially permanently ditched the US dollar. Egypt has decisively severed its reliance on the US dollar, aligning itself with the BRICS bloc strategic move towards de-dollarization. This bold maneuver signals a broader geopolitical realignment. By joining forces with BRICS, Egypt is charting a new course that deviates from the traditional economic paradigms dominated by the dollar. Well, guess what, guys? The United States has provided Egypt with more than $50 billion in military aid and $30 billion in economic assistance, according to the State Department. Well, guess what, guys? Uncle Frank is flexible. Ripple XRP has been there since 2021. Egypt's largest bank joins Ripple Network for cross-border payments. Egypt is in the top 5 nations globally in terms of remittance flows from expat communities. What do you think of that? And finally, some good news and a shred of common sense from Wall Street. JP Morgan Chase, BlackRock drop out of massive UN climate alliance in stunning move. JP Morgan Chase and institutional investors BlackRock and State Street announced Thursday that they are quitting, or in the case of BlackRock, substantially scaling back involvement in a massive United Nations climate alliance formed to combat global warming through corporate sustainability agreements. Thank God. Eventually, one of these swans is going to land, and I'm making my call later in this episode. From the Stock Dork, looming Chinese economic crisis sparks concerns for Western nations. The Chinese economy is looming to collapse, and it is expected to impact the Western world. This prompts the need for Western commentators to consider the broader repercussions of China's economic downturn, which could adversely affect Western nations. You can count on that. Fed Reserve Chair Jerome Powell will testify before key House and Senate committees next month. The House Financial Services Committee will hear from him on March 6. Chairman Patrick McHenry said that will be followed by the Senate Banking Committee the next day. A spokesman for that panel confirmed. Yeah, guys, I think we're going to add that shit to our calendar, which is coming up. You're going to love it. Speaking of the Fed Reserve, it's almost stress test time. On Thursday, they released scenarios for its annual bank health checks, which assess how well 32 large lenders would fare under a severe economic shock, including a U.S. jobless rate of 10% and a collapse in real estate prices. The Fed's annual stress tests, introduced following the 2007 to 2009 financial crisis, dictate how much capital banks need to be healthy and how much they can return to shareholders via share buybacks and dividends. This year's tests will attract heightened scrutiny from investors, analysts, and regulators following the failure of 3 banks last year, and as big banks are fighting the Fed over proposed new capital hikes that they say are excessive. The tests also come amid growing worries over lenders' exposure to commercial real estate after New York Community Bank last month reported losses on soured CRE loans, tanking its shares. The CRE sector has faced the twin challenges of financing difficulties amid high interest rates and lower office occupancy due to widespread adoption of remote work. So it's going to get sticky soon. And here's some fun headlines. BNP Paribas, HSBC, brokerage firms fined $20.4 million for naked short selling. Prosecutors raid offices in short selling investigation, may face criminal charges over short selling. Prosecutors investigating illegal short selling allegations against foreign investment banks raided the Seoul offices of BNP Paribas Securities, HSBC Securities, and HSBC Korea on Thursday. I just can't wait for this to happen here in the U.S. Gensler would just fine them and let them resume stealing immediately. Do either of these firms short AMC? Well, BNP Paribas Arbitrage owns some puts against our stock, but who didn't, right? Now, AMC closed down 6 cents on Friday, losing 1.23%, but did close above Max Pain. That's the second week in a row. And on the 5-minute chart, you can see Amy got as low as 462 and reached a high of 495 to finish the session at 483. Now, one thing I'm continuing to watch is that March 15th options expiration, where I see 6,500 in the money calls, but 201,000 out of the money calls, right? So that sticks out like a sore thumb. On the put side, 26,000, almost 26,500 in the money puts, but 98,536 out of the money puts. So there's a lot of interest in this mid-March expiration, and I've got more for you on the next screen. Okay, now let's get into the fun stuff. This is not investment advice. I am not an investment advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. But when are we going to get some action, Uncle Frank? Well, on your screen is the most promising time window I've ever seen connected to this deal. Subscribers to this channel know that I don't believe we can win this thing under current conditions, but our enemies could lose. In other words, if the primes, the hedgies, the regulators, and even AMC senior management are working together and or against us, you can see by the stock price it's nearly impossible we can win. But, these people do have a tendency to destroy themselves, and on a pretty regular basis. Remember Archegos and Credit Suisse? Well, that 167-year-old Swiss bank was vaporized, and something like that can certainly happen again and soon. So let's start with the first thing on the calendar. End of the month, February 28th, is AMC's earnings call. Now, we may not be profitable, but we're certainly going to beat Q4 of last year. Also, we're going to have a year-over-year comparison that's going to be pretty strong. Now, what we don't know is if we do get a rally on good news, will Adam Aron kill it, right? Will he kill it before, during, or after the call? We don't know. But what we do know is we hit a lot of milestones last year, okay? And Dune Part 2 drops just a couple days later on March 1st. So the ideal situation in my mind is we have a great earnings call. Adam doesn't kill any rally that we might get, right? And then we go into that with some momentum for our first big blockbuster of the year, which is already getting great reviews. Now, on March 6th and 7th, Jay Powell has to testify before Congress. On March 11th, that's the beginning of my time window, the FRB ends its bank term funding program. On March 12th, we have CPI. On March 14th, we have PPI. On March 15th, we've got triple witching expiration day, and that's the same day that we see all that huge open interest on AMC options, right? Then March 19th and 20 is the FOMC meeting. Now, we may not get a rate cut, but the focus of that meeting is shifting to balance sheet runoff. The point I'm trying to make here, guys, is that's one hell of a treacherous week if you're a predatory short hedge fund. If a black or white swan flies into the middle of all these economic events, we could see some serious action. Okay, now maybe we can start building some momentum starting here. Paramount Pictures' Bob Marley, One Love opened to $14 million at 3,500 domestic locations on February 14th, making it the #1 midweek Valentine's Day opening ever. The film earned an A on CinemaScore and scored 5 out of 5 on ComScore PostTrack, leading into the 6-day holiday weekend. Box Office Pro analyst Sean Robbins is forecasting a 6-day opening weekend range of 30 to 40 million. Exit polls found that 80% of moviegoers would definitely recommend the movie. And now let's add this to the mix from Complex. Dune Part 2, first reactions are in, promising an astonishing sequel. And from The Hollywood Reporter, Dune 2, first reactions from the premiere, jaw-dropping masterpiece. The first reactions are in for the first hugely anticipated movie of 2024, Dune 2. The long-delayed sequel continues the story of author Frank Herbert's space epic, and the initial reactions are extremely enthusiastic, with many calling the film a masterpiece of cinema that is even better than Dune, the original. So, Uncle Frank, when are we going to get a black or white swan? Well, I'm hoping for one right in the middle of the time window we've already discussed. But at the top of my list is Contagion from the commercial real estate crisis. Then we have the Chinese economy imploding. Then we have conflicts breaking out all over the world. But Invez is pointing to the next downgrade of U.S. debt as the next swan. So let's look into it deeper. Headline: this could be the next black swan event in the U.S. Black swan events are usually difficult to predict. The next key event will likely be a downgrade of the U.S. by Moody's. Fitch and S&P Global have already slashed their U.S. credit rating. Now, on November 10th of last year, Moody's lowered its outlook on the U.S. credit rating from stable to negative. But Moody's reaffirmed the nation's top credit rating of AAA. The negative outlook signals an increased risk of that rating being downgraded over the next 1 or 2 years. Now, Black swan events are often rare in the financial market. The most recent events that can be put into that category are like the global financial crisis in 2008, COVID-19, the Russian invasion of Ukraine. These events tend to have major implications in the financial market, and I think we're due for one soon. Now, guys, I wouldn't be doing my job if I didn't examine real threats to AMC. This trend of big streamers skipping the theatrical release is very concerning. If they all gang up on us at the same time, it would be a disaster. Check out this headline from Entertainment Weekly. Roadhouse director Doug Liman explains why he's boycotting the premiere of his own movie. Roadhouse is set to have its world premiere at South by Southwest on March 8th. That's its opening night, but it's scheduled to be released in the U.S. via streaming on Prime Video by Amazon and MGM Studios on March 21st. Guys, even the director is boycotting them not dropping it in the theaters. And here's the other one I'm worried about. The new Beverly Hills Cop hits Netflix on July 3rd, almost a full 40 years after the original hit theaters. From Deadline, Netflix Bella Bajaria on whether more theatrical is in the streamer's future. Quote, "It's just not our business." Netflix Chief Content Officer Bella Bajaria has no plans to double down on theatrical. Quote, "We're the only real pure play streamer, and our members love films, and they want to see films on Netflix," Bajaria said Wednesday night at a press conference for the streamer's 2024 slate. Now, maybe Bella forgot this headline. Glass Onion could have made $200 million, but Netflix only let it play in theaters for a week. From that article, Netflix may have left tens of millions of dollars in ticket sales on the table after only releasing Rian Johnson's Glass Onion in theaters for 1 week, right? So I respectfully hit up Bella on LinkedIn. Bella, please don't make the same mistake with Beverly Hills Cop 4, and I provided her with the article. Glass Onion could have made $200 million, right? So guys, if they're not going to drop either of these films in the theaters, all I could do is boycott them, right? And I hope that they bomb. Now, if 100, 200, 300 of you would email either Netflix and or Amazon and say, look, I'm not going to see these films unless it's in the theater, maybe a decision maker will see it. Jump in with me. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.